A very good evening to you all. This is Tina Joy welcoming you to our 189th Foundation Day. I will be a bit gender biased here when I quote Michelle Obama, former First Lady of the United States and author of the book Becoming. She says, becoming isn't about arriving somewhere or achieving a certain aim. I see it instead as forward motion, a means of evolving, a way to reach continuously toward a better self. The journey doesn't end. Established 189 years ago, the Bombay Chamber of Commerce and Industry was founded by 7 Britishers and 3 Parsis. But even today, it is evolving as a catalyst of change and a link between Indian industry and the global economy. Look at today's day itself. We had 2 big in-house events earlier in the day, the Infrastructure Conclave and the Sustainability Conclave, both attended by packed audiences. Needless to say, as we move forward to this evening's celebration of our 189th Foundation Day, it gives us a sense of pride to be a part of this legacy. To start the evening's proceedings, I would like to invite on the dais Ms. Pinky Mehta, President Bombay Chamber, and CFO Aditya Birla Capital to present her welcome address.
Mr. Kumar Mangalam Birla, Chairman, Aditya Birla Group, Mr. Dinesh Khara, former Chairman, State Bank of India, Mr. Sudhanshu Vats, Vice President, Bombay Chamber, and Managing Director Designate, Pidilite Industries Limited, past presidents, distinguished board members, consular corps, members of the Bombay Chambers, and esteemed guests. It is my privilege to extend a heartfelt welcome to all of you on 189th Foundation Day of the Bombay Chamber of Commerce and Industry. I would like to take this opportunity to express my deep gratitude to our chief guest, Mr. Kumar Mangalam Birla, for graciously accepting our invitation to join us on this special occasion. We are equally thankful to our esteemed guest, Mr. Dinesh Khara, for joining us on this special occasion. The Bombay Chamber, established in 1836, has transferred a remarkable journey, playing a vital role in shaping the economic and the commercial landscape of India. Today, it's not a commemoration of our history, but a celebration of our unwavering commitment to excellence and progress. As we pay tribute to John Skinner, our founding president, and his committee of 10 members, whose vision and dedication laid the foundation of this prestigious institution. Their spirit continues to inspire us as we build on the legacy. Our Foundation Day serves as a reminder of the Chamber's origin, its mission to promote trade and commerce, and its role as a voice for the business community. Over the decades, the Chamber has significantly contributed to the development of Bombay, now Mumbai, including key milestones such as facilitating the establishment of the Railways Bombay Port Trust and continuously advocating for an environment conducive to the trade and industry in Mumbai and across India. I would like to pause here for a bit to present a video that showcases how the Chamber has evolved over the years and transformed into a modern catalyst of change.
Established in 1836, Bombay Chamber is a legacy institution created by 7 British pioneers and 3 Parsis. Starting with John Skinner, the founder and first chairman of the Chamber, and Narayan Dandekar, our first Indian president, the Chamber has been shaped by exemplary leadership from esteemed multinational organizations. The Bombay Chamber has spearheaded Mumbai's transformation, pioneering milestones like India's first railway line, 1853, the India Postage Act, 1854, trade standardization, arbitration systems, and has initiated cultural events like the Kala Goda Festival. Over the years, the Chamber has organized conclaves, webinars, seminars on various trending topics that have had far-reaching impact on industry. Our flagship Shipping Conclave is a highly anticipated industry event that brings together key stakeholders, including representatives from the Ministry and Port Authority. the Chamber's DEI Awards has become an industry benchmark for excellence in diversity and inclusion. Our signature events, including AgriCorp, bring together agriculture stakeholders, while others focus on mutual funds, insurance, banking, sustainability, CSR, governance, and HR. Through the Young Bombay Forum's Thought Leadership Series, industry luminaries share their journeys, inspiring the next generation of business leaders. The Chamber's Foundation Day and AGM feature distinguished speakers. Through its events, the Chamber has helped handhold its vast MSME membership base in their corporate journeys. As a vital link between industry and the government, the Chamber also makes various representations voicing the concerns and recommendations of the industry, including pre- and post-budget memorandums. To prepare and groom future leadership, the Chamber conducts mentoring and training programs and also offers platforms for venture capitalists, angel investors and startups to meet and connect. Industrial site visits are another avenue for showcasing industry best practices in sustainability and CSR. The Chamber's centrally located office premises also offers a high-tech, well-equipped conference along with office cubicles and workstation facilities available on lease. The Chamber's publications, including the annual Economic Outlook and Sustainability Surveys, the bi-monthly Bombay Chamber Connect, and its innovative themed desk calendar, are eagerly awaited each year. The Chamber also offers services like Certificate of Origin, Labour Advisory Services, Arbitration and Mediation, and Visa Recommendation Letters for members. As we move towards a Viksit Bharat by 2047, the Chamber will continue to be a beacon of light for the industry. We thank our esteemed members who have supported us in our 189-year-old journey, and we look forward to collaborating to build a developed India.
As I reflect on this illustrious history, I feel both a profound sense of pride and a deep responsibility to uphold the Chamber's legacy as a thought leader and a change agent in the realm of commerce and industry. This task is not we can achieve alone. It requires a collective support, goodwill, and contributions of all our members. The Chamber's unwavering commitment to unlocking the value of business has been evident in its actions over the years, whether serving as a bridge between the regulatory authorities and industries, conducting research to address complex challenges, or fostering collaborations for common cause. The Chamber has consistently prioritized the greater goods over the individual interest. Moreover, its ability to adapt to changing times, with each president advancing the agenda before passing the baton to the next, has ensured a steady and a thoughtful evaluation of its vision. This year's mission statement, Collaborative Development Towards a Viksit Bharat, centers on 4 critical pillars: embracing digitalization, bringing ESG to the heart of business, enhancing ease of doing business, and fostering diversity, equity, and inclusion. Building on foundation, the Chamber has aligned with Prime Minister Narendra Modi's vision of Viksit Bharat by 2047, which is a major focus this year. To support this ambitious mission, we initiated a series of impactful events, beginning with a highly engaging panel discussions on Viksit Bharat held on 25th June 2024. Additionally, we collaborated with Arthur Global to produce a comprehensive report on the Viksit Bharat, which will be unveiled today. This report serves as a strategic guide outlining the essential building blocks required to realize this transformative vision. As a Chamber, we have consistently organized an array of impactful events addressing topics of critical importance. Among these are today's conclave on sustainability, aptly titled as Green Growth for Viksit Bharat, and the Smart City Leaders Conclave, which dwelled into infrastructure advancement. Enriching farmers producer organizations over the theme of our 15th Agri Conference held on December 11th and 12th in Pune. This pioneering event, organized in collaborations with Kisan Forum, brought together a diverse group of stakeholders, including farmers producer organizations, organized retailers, startups, fintech companies, and both state and central government bodies. This synergy created during this conference set a new benchmark for collaborations in the agriculture sector. Equally noteworthy was our highly successful mutual fund conclave, alongside engaging the series of SM REIT, where packed audience gathered to hear insight from the industry leaders. We also held a CSR summit on a highly topical theme of CSR in the digital era, and the MSME conclave in financing SME growth. The Human Resource Committee of the Chamber also conducted the Workplace Summit on building adaptive organizations covering critical aspects such as hybrid work model of work, the POSH and its effectiveness, and mental well-being at work. These events underline the Chamber's dedication to fostering dialogue and innovations within critical sectors. Our core belief in supporting the development of industries and business shines through our initiatives to foster diversity, equity, and inclusion. Following the successful DEI award ceremony, the Chamber released the Coffee Table book capturing the inspirational stories of award winners. This publication serves as a powerful reminder of how incremental steps, when multiplied across sectors, can lead to transformative change. I encourage all of you to explore this beautifully crafted work, as it is both enlightening and motivational. In 2024, the Chamber conducted its inaugural Bombay Chamber Sustainability Practice Survey, a groundbreaking effort to gather insight and data from the organizations across India. The findings offers a comprehensive macroeconomic analysis of sustainability practices within India Inc., furthering our commitment to promoting environmental responsibility and sustainability growth. Additionally, we are in the midst of conducting a 7th Economic Outlook Survey among our members. This survey provides an analysis of the macroeconomic environment, shedding light on the challenges faced both by the large organizations and the MSME in conducting the business domestically and internationally. The insights gained will be shared with key governmental bodies, including the RBI and the Ministry of Finance, providing a robust foundation for regulatory reviews and policy recommendations. Looking ahead, we remain steadfast in our mission to organize many more such initiatives, continuing to play a critical role in supporting the growth and development of industries in Mumbai and beyond. Now I know you are all eagerly waiting to hear from our keynote speaker. Before I invite our chief guest for the evening, Mr. Kumar Mangalam Birla, to present his keynote address, let me give a brief introductions about him, though he doesn't require introduction. Mr. Kumar Mangalam Birla is the chairman of Aditya Birla Group, a global Indian multinational with a turnover over $65 billion and a market cap of over $100 billion. With over 28 years of him, he has led the group expansion across key sectors such as cement, chemical, metals, textile, fashion, and financial services, and executed over 40 acquisitions. The group operates in 40 countries, employing 180,000 people across 100 nationalities. Mr. Birla has held influential positions on regulatory boards, including as director on the board of Reserve Bank of India and chairman of the SEBI Corporate Governance Committee. He was awarded Padma Bhushan in 2023 and has received multiple honors, including the TIE Global Entrepreneurship Award and the Economic Times Business Leader of the Year. He is actively involved in education, serving as a chancellor for BITS Pilani, and has led IIM Ahmedabad and IIT Delhi as chairman. Mr. Birla practices trusteeship and has institutionalized welfare initiatives at the Aditya Birla Group, impacting over 11 million people annually. Distinguished guests, please put your hands together for Mr. Kumar Mangalam Birla as I invite him to the dais for presenting this keynote address.
Good evening, friends. It is an honor to be with you this evening as we celebrate the 189th Foundation Day of the country's oldest chamber. I'm here at the invitation of your president, Pinky Mehta. Pinky, as you probably know, has been a valued colleague of mine at the Aditya Birla Group for nearly 3 decades, standing out as one of our most accomplished CFOs. Her unwavering persistence and exceptional commitment are truly commendable qualities that I'm sure you've observed at the Bombay Chamber. This chamber has so much of history, serving trade and industry for nearly 2 centuries. The chamber has played a vital role in promoting the Mumbai region as the country's industrial, financial, and commercial capital over so many years. And today the Bombay Chamber stands for a wide spectrum of organizations whose business operations and commercial influence extend throughout the country. And while the Chamber plays a notable role in supporting the development of industries, I see that it also serves as a highly effective vehicle of communication between government bodies and industry. Friends, the vision that calls all of us today is the government's inspiring vision for a Viksit Bharat by 2047. The Chamber's mission statement this year, Collaborative Development Towards a Viksit Bharat, capture the significance of the agenda for all of us in Indian industry. This evening, as the Chamber unveils its report on Viksit Bharat 2047 and discusses the blueprint for a developed India, we need to discuss the framework of our collective responsibility towards a Viksit Bharat. I firmly believe, as I'm sure do a lot of you, that we are at a momentous period in the history of our country. A lot of hard work has already been done. We are poised for a transformative change that will see a developed India on the other side of the paradigm shift. Let me share a few factoids with you to set the context. About 10 years ago, we ranked as the 11th largest economy in the world. Today, we are at number 5 and already on course to overtake Japan and become the number 4th with a $4 trillion GDP by next year. 2 decades ago, this would have seemed completely unimaginable. The size of India's nominal GDP is estimated to nearly double to US $7 trillion by 2030. This would make India the 3rd largest economy in the world, raising its share in global GDP from 3.6% to 4.5% and lifting the per capita income to the upper middle income group. The implications of this are nothing short of staggering. If income rises as estimated, it will pull millions out of poverty into an aspirational middle class. New generations of youth that are digitally connected and socially aware will become the engine for household consumption. By 2030, it's estimated that nearly 80% of households will be middle income, up from about 50% today. And in 10 years, the per capita income is expected to rise to about $7,000 US, boosting the quality of life for more than 1.2 billion Indians. And this rise in the number of people with disposable income would be the largest national development effort any democracy anywhere in the world has ever attempted. We have witnessed how structural reforms by the government have supported this economic lift. GST, as we know, has integrated the national market. The introduction of Aadhaar, Jan Dhan, and UPI have vastly enlarged the sphere of financial inclusion to embrace citizens who were unserved this far. We see a visible change in the economic landscape of the country. Urbanization, as we know, is on the rise, and it's an indicator of upward mobility. Every minute, 30 people are moving from a village to a city or a town in India. But beyond the numbers, our core strength is our people. Even as other developed economies face challenges of an aging population, almost 25% of the incremental global workforce over the next decade will come from our country. We are poised to have over 1 billion working age people by the year 2030, and this is the cohort that will power Viksit Bharat. We stand therefore at a pivotal juncture where our ambition, our imagination and performance paves the way for a bold, transformative India. It is time to reimagine India's role as a global force, as a vanguard of ideas and solutions. I believe that there are 4 fundamental levers that will be integral to shape Viksit Bharat. Let me start with the first. The first among them, I believe, is business. The government, to a large extent, has done its bit by creating an enabling ecosystem, and it is now for us in business. And this includes India's corporates, India's exciting startup sector, and India's talented MSME businesses to drive the growth momentum forward. We have the capacity and the responsibility to define the vision for development and also shape the India of tomorrow. The new vision should be globally benchmarked. India as a manufacturing and a service hub can rewire the supply chain of the entire world. We know that India has the intrinsic capacity to create world-class companies. For example, Maruti Suzuki's market cap in India is double that of its parent in Japan. I believe that the large Indian companies of tomorrow will emerge from the entrepreneurial sector of today. And a groundswell of entrepreneurial energy, as we know, is now palpable in our country. We now therefore need to think big. Over the last decade, the government has increased its capex by fivefold, and it is now time for India Inc. to join the party. Large conglomerates like ours, the Aditya Birla Group, have embarked on an unprecedented expansion spree, but this investment fervor needs to be far more widespread across industry. This brings me to the second pillar for Vikas, and that for me is innovation. Over the last decade or so, India has demonstrated to the world the power of innovative digital public goods. The digital edifice that has been painstakingly built in India by the government covers payments, identity, data management, and commerce, and has no parallel in the world. Let's just look at two examples. Take the Anna Yojana scheme that transfers food grains for free to the poor. This scheme covers 800 million beneficiaries. This number is greater than the entire population of North America. Or for that matter, the Awas Yojana project that provides housing for 180 million people. That's like providing housing for a population which is more than the size of the population of South Korea and Thailand combined. And this has been made possible thanks to the digital public infrastructure put in place in the country by the government. The need of the hour for India to achieve the next level of growth, I believe, is to leverage technology across sectors: manufacturing, agriculture, healthcare, and education, among others. The onus is now, I believe, on India's private sector to innovate and harness the power of technology for transformational change. In fact, a recent PwC analysis suggests that up to 40% of India's $10 trillion economy in 2034 should be derived from new solutions, hence the need for innovation. This brings me to the third fundamental factor, which I think is critical, and that is talent. We Indians, as you know, are natural entrepreneurs. In just 75 years of independence, we have broken into the top 5 global economies. And globally, Indians are either creating or leading some of the world's largest companies. We have the talent, many enabling factors are in place, we have a strong capital infrastructure in terms of PE and VC investors who are ready to fund new business ideas and have done that in large contexts here in our country. We also have a robust higher education system that develops skilled talent. India's workshop, interestingly, is shifting from agriculture to more productive sectors, boosting productivity and providing a competitive advantage to our country. The challenge before the government as well as the private sector is to create new employment opportunities and skilling capacities. This will also mean redesigning of education and vocational courses to develop industry-specific skills. Diversity and inclusion also come into play here. Increasing the labor force participation will particularly require an increase in the participation of the female labor force. These moves will directly impact India's growth rate while also improving the quality of our human capital. At the other end of the spectrum, as we migrate to Industry 4.0, adopting AI, ML, IoT, and other such new technologies, we also need a concerted effort to elevate our technology talent pool as well. For this, we as industry need to invest in education, skilling, and training at the very highest level, comparable with the very best that the world has to offer. For instance, as an example, AI alone has led to the creation of many new jobs: natural language processing specialists, machine learning engineers, smart home designers, AI research scientists, user experience designers, robotics engineers, and cyber security. So we need to identify such emerging areas and build the capacity to skill our young talent so that they can be ready to work in the industrial environment of tomorrow. And the fourth fundamental factor, in my view, is the journey towards Viksit Bharat is sustainability. My great-grandfather and the patriarch of our group, G.D. Birla, believed in the extraordinary potential of business as a force for good. And this philosophy has guided our action over the generations. We believe that it is imperative in a world where economic growth and social equity need to advance in sync to make transformation possible and sustainable. Future-ready enterprises consider collective prosperity, in our view, as a strategic imperative. Going forward, we hope to see many more enterprises embracing the creation of long-term value, not just for stakeholders, but not just for shareholders, but for all their stakeholders. Companies will need to reinforce the belief that the pursuit of a shared future can be profitable as well as sustainable. Building for tomorrow means embracing the notion of responsible businesses. For example, it requires transitioning to renewable sources, minimizing waste, working in harmony with the natural world, circular economies, extended producer responsibility, lifestyle impact measurements, net positivity. These will be the gateways to responsible growth and development in the future. And these issues will continue to shape the future of capital, of innovation, of technology, and of our society. The private sector's role is, I believe, critical in realizing these objectives. Indian companies have shown agility in adopting sustainability practices, recognizing that environmental responsibility aligns with long-term profitability and value creation. To summarize, the collective journey towards Viksit Bharat will be driven, I believe, by these four key pillars that I have just outlined: business, innovation, talent, and sustainability, or let's call it BITS. And I can tell you from personal experience as the Chancellor of BITS Pilani that with an acronym like BITS, you just can't go wrong. As you all know, last night an 18-year-old Indian Grandmaster became the youngest ever world chess champion. D. Gukesh, I hope I'm getting his name right. Historic feat is emblematic of the rise of a new India, a young India, a self-assured India, a path-breaking India. And as this new India unfolds, it promises to redefine possibilities and inspire greatness. I'm confident that the Bombay Chamber will continue to play an active role in our journey towards a Viksit Bharat, and I would like to convey my very best wishes to all of you, members and office bearers, as we collectively contribute to the creation of a Viksit Bharat. Thank you.
Thank you, Mr. Birla, for your very insightful words. I would request our President, Ms. Pinky Mehta, and our Vice President, Mr. Sudhanshu Vats, to present Mr. Birla a memento as a token of our appreciation. Once more, a huge round of applause for them. Thank you, Mr. Birla. Thank you, Ms. Mehta. Thank you, Mr. Vats. Next on is a fireside chat between two industry stalwarts. Before inviting them to the dais, I would like to give a brief intro about them. Mr. A. Balasubramanian is a managing director and CEO of the Aditya Birla Sun Life AMC Limited, with over 3 decades of experience in the mutual fund industry. He joined the company in 1994 and became CEO in 2009. Under his leadership, the firm manages assets exceeding rupees 3.60 lakh crore. He has been recognized with multiple awards, including CEO of the Year by Asia Asset Management and the Aditya Birla Group's Chairman's Individual Award. Mr. Balasubramanian has held key roles in industry bodies, including chairman of AMFI and a member of various committees and boards, including IFSCA and SEBI. He holds degrees in mathematics and business administration and has completed advanced management programs from IIM Bangalore and Harvard Business School. He is also active in philanthropy, supporting child heart care and promoting Indian arts. Coming to Mr. Dinesh Khara, he served as the chairman of the country's largest bank, State Bank of India, from October 2020 to August 2024. Having joined the bank as a probationary officer in 1984, he gained rich experience in all facets of banking. Before assuming office as chairman, Mr. Khara held several key positions in SBI, such as MD of Global Banking and Subsidiaries, MD Risk Compliance and Subsidiaries, MD Associates and Subsidiaries, and MD and CEO of SBI Mutual Funds. He has held various operational assignments at various geographical locations in the country. He was also posted to Chicago for an overseas assignment. As managing director, he led all the functional areas of the bank's operations. In addition to being MD responsible for subsidiaries of the bank, he had an opportunity to develop insights into the complete functioning of the financial sector. He also seamlessly executed the merger of 5 erstwhile associate banks and the Bhartiya Mahila Bank with SBI. Additionally, he also headed the IT functions of the bank. Mr. Khara is a postgraduate in commerce from Delhi School of Economics and an MBA from FMS New Delhi. He is a fellow of Indian Institute of Banking and Finance. He is passionate about reading and very keenly interested in using analytics and technology to make banking simpler and bank finance easily accessible to all citizens. I now invite Mr. Balasubramanian and Mr. Dinesh Khara on the dais for the fireside chat. Over to you, gentlemen.
And good evening, everyone. Thanks to the President, Pinky Mehta, to give me the assignment of being part of the board of Bombay Chamber of Commerce. And I have the privilege of having a fireside chat with SBI ex-chairman of SBI, Mr. Khara. Of course, I have the privilege of sharing the industry dais with him as a SBI Mutual Fund MD earlier, and also as one of the most respected the chairman of a bank who turned around the entire public sector banks, including State Bank of India. Before I start the questions, I just wanted to put forth some facts. When the SBI Bank, the market cap in the year October 2020 was about 1.68 lakh crore. When he left the bank, the market cap was about 7.2 lakh crores. So about 4.8 times growth, 326% growth. In fact, in our industry, mutual industry, as well as the insurance industry, we always used to joke that if you make the elephant dance, then the growth can be unlimited. That's what exactly did when SBI Mutual Fund, when he took charge. He made the entire SBI to become one of the largest distributors in the country. Today, the SBI Mutual Fund success predominantly is driven by State Bank of India. It was his vision which made it possible. So with that brief introduction of his success, sir, I'll take the liberty of asking a question that Mr. Birla spoke about 4 things, which is business, innovation, and talent and sustainability. And within that, if you see, there has been a significant focus that I think country has been talking about is the investments infrastructure, which the government has been doing it, public and private. What is your take in terms of the capex cycle that has been quite critical by way of private sector participations to drive the Viksit Bharat, as the first question to you?
No, I think when it comes to Viksit Bharat, unless and until the infrastructure is something which is fixed, perhaps the country cannot become Viksit in the real terms. And with that in mind, we have already observed that the kind of investment which has gone into the road infrastructure in the country and the very clear ambition of reducing the logistic cost to a single about 9% or so. And we are already on the track. So I think this is something which is quite credible, which has already happened. And also, more than that, the important factor is that the multiplier effect of anything being spent for infrastructure is as high as about 4 times. So I think part of it is also attributed to during the COVID period, when actually the economy was in need of some kind of support. The kind of investment which was done in infrastructure has actually stood very well in terms of putting the economy on a very different pedestal, and also in terms of reducing the infrastructure cost also, logistic costs also, which will certainly go a long way in the days to come, particularly when we are aspiring to become a manufacturing exporter from the country.
Yeah, in fact, I think what you mentioned about clearly visible in terms of if you take the toll collections, coming from increased collection which is coming each day or each month has also been rising, which is nothing but reflection of how the infrastructure development can lead to a significant growth in the economy.
No, in fact, I think it is still the work in process, and in days to come, we have already seen the new ports, new airports coming up, the way aviation infrastructure is really developing in the country, and I'm sure it will go a long way in terms of building the necessary rails for the growth of this economy to become a developed nation.
Yeah. Just a related question on that. I think Mr. Birla also talked about MSMEs and SMEs will be one of the major area of focus as we move forward. And State Bank of India has been in the forefront in ensuring money is made available to every corporate citizen in the country at a reasonably cost. Today, the cost of capital for most of the companies have come down quite significantly thanks to the low interest rate at which people are able to borrow. But how do you think that this shaping up as we move forward, given the fact we have made a significant progress with respect to NPAs, recognitions, provisionings, and do you think that Indian banking system is actually fully equipped to fund the growth need of MSMEs? COVID time, of course, the significant growth came thanks to the Government of India, gave a guarantee. As it's being withdrawn, you think similar confidence will remain to drive the 2047, the vision of Viksit Bharat?
No, you're very right, particularly what was talked about in terms of the employment creation in the economy. That is possible only and only if we have the SME growing well. And to really make it happen, of course, in the past we have seen that there was always a challenge in terms of the credibility of their balance sheets. And when the banks used to extend the balance sheet-based finance, they were always have some kind of a confidence issue in terms of the credibility of the balance sheet. But thanks to the digital public infrastructure which has come into existence, today there is a situation where there is a lot of information which is available relating to these SMEs, structured, unstructured information. And based upon that, apart from that, the GSTN is a very important information which provides the input and output both. And based upon that, it is very easy to extend the cash flow based lending. And happy to share that we also had a similar situation. We used to have very high NPAs in our SME book in State Bank of India. And in last about 2 years or so, in fact, almost about 3 years back when we started pushing SME on the ground, we could reduce this NPA from somewhere around 9% plus to about 3% gross NPA. And that could be possible because we had started using the unstructured information relating to SMEs. And also, we started having some kind of predictive algorithm through which we could figure out that which SME is likely to get into stress. And more than that, thanks to the ecosystem which has got developed in terms of financing the receivables through TREDs. So when we see that the TREDs, the payments are being made on due date, it's a very clear reflection that the quality of the product is also up to the mark. And that is something which gave the confidence to the bankers to extend the working capital loan also. So I think these are some of the initiatives which have been taken. Supply chain finance has become very strong product. And also the ref check with the industry major is again a very important information which is now available. So I think these are some of the enablers which have happened. Apart from that, we have also seen a responsible borrowing, I must also say that, and that is attributed to the fact that the ecosystem has seen the insolvency court coming into existence. So no more losing the control of an enterprise is a fiction, it's a reality. So that is the other reason why we have seen that there is a responsible borrowing. So these are some of the factors which we have seen on the ground. And that is the reason why perhaps today bankers have much more confidence in terms of lending to SME as compared to what it used to be in the past. In the past, they actually used to depend upon the CGTMSA guarantee. Now, of course, there also SIDBI has made the invocation of the guarantee much easier. Cost of the guarantee has been reduced. So I think various efforts have been made in last couple of years to see that there should be enough enablers on ground for promoting the SME financing.
Yeah. In fact, one of the interesting data points which is there, thanks to various steps were taken by both banks and government to reduce the Reserve Bank of India to reduce the NPAs in the system. In the last few years, the Nifty 50 companies, the leverage has dropped from 0.4 to about 0.2. That means most of the companies today, the leverage ratio is the least, which essentially means to drive the next Viksit Bharat. They'll have so much of leg room for them to borrow from the banking system, grow the business. I think it will be quite significant if you go by that logic.
And there is a lot of cash in the balance sheet.
Cash in the balance sheet as well, correct.
Which can actually support the investment initiative, or for that matter, the animal spirit,
correct,
which is required for the country to become the Viksit Bharat.
Yeah. So I think you mentioned about reaching to the last mile through the technology. I think you have been in the forefront and introduced the app, a mobile banking app, which is you only need one. You only need one, which is a app. So I was just listening to the Prime Minister, the promotion that they did in Maharashtra, which is Ek to Safe hai. Ek to Safe. I could actually relate these two things. State Bank of India was the first one actually introduced, as the mother of everything, to reach the lending to every citizen of the country, as well as give one of the best possible experience to the customer who deals with you. Could you please highlight how it was visualized, which you think that potentially this will be one of the medium through which the money will be made available in the next round of growth that we are looking at as an economy?
No, I think when we came out with the app, the intention was that initially the intention was that it will actually replace our digital banking initiatives. But then during the course of the journey, we could realize that we can actually make it a digital bank by itself. And even though the RBI has not come out with the regulation for the digital banks, but we thought that let us create a digital bank within the physical bank. And happy to share with you that almost about 2 trillion worth of loans are now being underwritten with the help of And also almost about 500 crore worth of income is getting generated by selling the third-party distribution product. So this is, in fact, when we had coined the concept, you only need one, we actually evolved it into 3 phases. One is the pure play banking, second is the financial superstore, and third is e-commerce. And we have actually already started reaping the benefit of that. And my sense is that in the days to come, we have actually started offering even the protection cover through Apart from that, pre-approved personal loan. In fact, when we talk about SME, we have started profiling the current accounts, and with the help of pre-approved Venus loans are now being given with the help of few clicks, and the amount gets credited to the account. So this is the convenience which we have brought in. So this is up to one particular layer it will be useful. And encouraged by this particular experience, now we have come to the SME lending also. And from 5 lakh to 5 crore, it is all digital. We have embedded the underwriting principles also into the algorithm. And based upon that, we are in a position to offer. And the plan of action is to go up to 50 crore. So I think with that, to a greater extent, we'll be in a position to address the irritants which are there for financing for SME.
Yeah. I think clearly the large banks like SBI, SBI and other PSU banks and banks, if they actually able to reach out to the last mile, I'm sure the Viksit Bharat will become reality. is one of the challenge which is being faced by banking, which is today the wide topic of discussion, is about rate of deposit growth is less. Credit growth has been good. At the same time, very high credit growth, which is being witnessed by MFIs and BFCs, and reaching to the last mile at the personal loans, which the Reserve Bank of India has been expressing concern. And in that regard, do you see any need, rather you see any shift in the way the banking industry is being functioning with respect to asset liability thing, how it will change as we move forward? Is the banking industry is actually undergoing a major change for the next round of revolution for the next 10, 15 years? And second is, in terms of funding, if you all of us know, of course, the fact that we moved away from developed financial institutions, from ICICI and IDBI to the banking, and again we are coming back with respect to creating one or two such institutions will help in funding the growth needs of the country. That's also now is coming out, and NIF came, and infrastructure finance company has been set up. At the same time, multilateral agencies, FM has been talking about quite aggressively that multilateral financial institutions should also play a role. What is your take in terms of the next, say, 10, 15 years? Would there be a significant change the way the banking industry has been operating all the last so many number of years and drive the growth for the next few years?
I think change is a reality. All of us need to adopt the change. That is what the mantra is. And having said that, now what you mentioned in terms of the dynamics, in terms of deposit and loan book, we have done some research and we have seen that normally there is at times there is a divergence between the loan growth and the deposit growth, but invariably that gets bridged in about 3 to 5 years time. And we have already started seeing from the last quarter onwards, the loan book growth and the deposit growth is almost converging now. So that is one thing which has happened. See, this is a fact that today when it comes to the depositors, they have got an option. Either they will put their money into deposit or they will put into the investments. But much of it is a function of their risk appetite and how they really want to really address that risk appetite and how they want to balance the risk appetite and the return. So that is what happens. I think it's a market dynamics. All of us have to live with that. Now, when it comes to going forward, how the growth will be, I would like to give some kind of a data point which I had done, some work which I had done, and I could figure out that roughly about when we are talking about the Viksit Bharat in the year 2047, the deposit levels of the industry must grow from about 200 trillion to about 1200 trillion. And also when it comes to the loan book to grow from about 164 trillion now to about 1200 trillion. So this is the kind of a growth which has to be seen, but it has to be seen in the context that from 2014 to 2024, the deposit have actually grown from about 60 trillion to about 200 trillion. So this is something which you have already seen. So now looking at the fact that the new levers of growth which have been introduced into the economy, there is every possibility that this number, though as of now it looks to be astronomically high number, but to my mind, with the kind of acceleration which is seen and the way we are actually, there was a point of time when we moved from 2 trillion to about 4 trillion from the year 2014 to about 2024. And now we are seeing that every 3 years we are adding 1 trillion in terms of the GDP. So that is a kind of a change in the dynamics which is seen. So I think to my mind, this is achievable. The new levers of growth in terms of the startup economy which is there, the new levers of growth in terms of the renewable which are now getting introduced, EV, renewable, etc. So these are the new levers of growth, and apart from that, the traditional industry will also undergo a change. And to my mind, the way this, it is expected, the GDP composition will also see a transition from about 30% as of now in the industry to about 35% from the industrial sector. Agriculture will perhaps come down from about 15% to about 10%. So this is the broad composition of the economy, what it will look like in the year 2047. So to really make it happen, one, of course, our savings rate and our investment rate has to actually step up from about 30% to about 35% kind of a number it has to come in. So I think all this is possible because when we talk about the AI, which is going to be another lever which will actually enhance the productivity significantly. So I think to my mind, if at all we have to really move towards the developed nation, we have to see that we effectively start leveraging this AI. And there are three things which to my mind we need to focus on. One is we have to have the efficiency of the capital because we are a capital deficient economy. We have to see that how best we can deploy the capital. That is one. Secondly, how best we can deploy the talent. That is, and also similar at the same time, we have to actually invest in terms of capacity building as far as the manpower is concerned, which of course thanks to the internship scheme which has been introduced by the Government of India, that will go a long way in terms of upgrading the talent skill of our workforce. And third, of course, is in terms of the energy efficiency, because when we are talking about the AI, it's going to be a power guzzler, and also the kind of industrial growth which we are witnessing, which we are visualizing, even that will need a huge power. So I think our initiative in terms of the green power, our initiative in terms of the renewable will stand by our aspirations and will help us in achieving these things in no time. This is what my assessment is.
Yeah, thanks, sir. I think you mentioned about internship. In fact, I just heard from one of the public sector CEO in one of the conference yesterday. The internship, what they have provided for some of the students, and they become so energetic, and they actually want more work to be done, and therefore they keep coming back, what else can be done, because they have limited window to work, and within the limited window of say 2 months or 3 months, they want to actually contribute the more. So I think it's a very interesting point that you made. Maybe it can be a good innovative step that could also drive the youth. The last one question around agriculture sector farming income has to double, which essentially means every produce that is being made. I think Bombay Chamber of Commerce also have done some work around the on the farming sector. So if agriculture income has to double, which essentially means it goes against the concept of controlling inflation. If the prices goes up, definitely from a consumer point of view, price goes up. But farmers' point of view, definitely of course increase the income level. And given the fact there is a significant focus, it's also coming from the government to drive the agriculture income to go up quite significantly to drive the next economic growth. And the second related point in the same vein, same thing, which is the MFI sector has also been taking care of the needs of the people requirement for funding. But in fact, it's also coming at the cost of very high cost of interest. So I think there are many companies charges about 24, 25, 30. Do you see any significant change coming on these two aspects which needs regulatory intervention so that the Viksit Bharat become real and therefore we make it more sustainable from the overall growth momentum point of view?
See, when it comes to agriculture and what you talked about, unless and until the farmers are remunerated well, there would always be a challenge in terms of improving the productivity of the farmland because there's no incentive for them. So I think from that perspective, if at all we will look at it, the intermediation has to be made more efficient and effective. And with that in mind, there are about 7,000 odd organized mandis are there in the country. And the distance, average distance is about 400 kilometers. Whereas as per the policy, as per the government intention, that average distance should not be more than 80 kilometers. And with that in mind, the ENAM is actually a solution. And perhaps we need to make it much more vibrant. And if at all we can make it more vibrant, then perhaps from farmer to the ultimate consumer, the things can be sold without any intermediation, so which will lower the cost of the produce in the hands of the consumer. So I think to my mind, this is one of the solutions which can be tried out. And particularly when we have got such an extensive digital public infrastructure, we can actually make the best use of it. The second question, which is relating to the MFI, of course, we have seen the MFIs have got on an average, they have got a gross NPAs as high as about 8 to 10%. And at the same time, for the similar group of customers, there is SHG financing. There, the NPA is just about 1%. So that very clearly means that if at all SHGs who have lent to, they have gone for very indiscriminate lending to each household. They have gone to the extent of lending 8 odd loans also. So naturally, they will have to really pay the price for this kind of a reckless lending which they have done. So I think, to my mind, unless and until there is some kind of a ceiling on the interest rate which they can charge, I can understand that there is a operating cost is much high, but it is not as high as, because in case of SHGs who are being financed, they are being charged 12%, and these people in MFI, they are charging 30%. The difference is not about 18%. So it cannot be more than 3 to 4% at the most for the operating cost. So I think if at all the interest rates are made reasonable, then perhaps this particular sub-segment of the economy also can become a responsible borrower. So this is, maybe they will have to go through a bit of a pain right now, but having gone through the pain, they will have to address it perhaps. Thank you.
Yeah. Just on the related thing, do you think that banking industry will be able to actually do that disruption of, because banking industry is the cost of capital is low, and their reach is also equally good when it comes to the question of reaching the last mile, given the digital connectivity they built.
No,
actually,
actually,
the banking industry will be able to actually do even gold loan, they have already done a great penetration.
It has got the capability, and it has done it over the period of time. They have always responded to the needs of the economy, and they can always figure out the structures through which it can be responded. So I think it's a doable proposition for the banks of the country.
Yeah. Thank you, sir. I think just last one comment from your side. What will be the key challenges, especially from the regulation and policy point of view, which need to get addressed as well as you move forward?
I would say not from the regulatory perspective, but yes, of course, when we are becoming more and more digital, the cyber is a very major challenge, and we need to probably address it effectively and in good time. And it requires educating customers, it requires strengthening the firewalls within the system. But yes, of course, this is something which all of us, in the financial sector, all the sub-segments need to really address this particular threat.
Yeah, I think in fact it is a very interesting point that of late the discussion has been more around how to protect yourself from a cyber security attack, and whether it is an individuals, whether it is the corporates, whether it is any government institutions. That is something very valid point, and thank you, sir, for your valuable time and great insight that you have shared, given a rich experience in building from to 7 lakh crore market cap in SBI and lifting the whole public sector banks. Thanks to the SBI, the rub effect came to the entire systems. And once again, thanks for being part of our discussion today.
Thank you very much. Thanks a lot.
Thank you, Mr. Balasubramanian and Mr. Dinesh Khara. I would request you to stay on stage as I invite Ms. Pinky Mehta, President, and our Vice President, Mr. Sudhanshu Vats, to present you mementos as a token of our appreciation. Thank you for your time.